Trading pure price action is not just effective, it's one of the best ways to make money in Forex, crypto, or stock. Today, I'm not just teaching you any price action strategy. I'm revealing my personal methods that are perfected over 10 years of Forex trading. Plus, I'll give you an easy 3-step plan to follow to elevate your price action trading to the next level. So step 1 for trading price action is identifying the trend and market structure. Okay, firstly, to find a solid bullish trend, we have to pinpoint candlestick price action that is currently making new higher highs and higher lows. And if we look closer, this is currently happening on the charts. Every single time a candlestick pushed a little higher, it's a new high, and the same thing is happening on the higher lows as well. Typically, market structure will move as a ladder every single time it pushes up and retests the previous area low. Price action would work the same way in a bearish market, except we would be looking for lower lows and lower highs every single time the candlesticks push towards the downside. It's a new low, and every single time it retraces back, it's a lower high. Now, second, I know it's price action, but you may want to utilize simple moving averages to confirm your trade bias. I like using the settings 20, 50, and 200. It just gives me that extra confluence you need when trading price action. And as we can see, the lines are reacting heavily with the candlesticks, giving us great trading opportunities every single time they pull back. It's also important to mention that sometimes a trend can be identified too late. As we can see, this is a trend towards the upside. However, the main problem is it stopped making new highs just over here, and the market started to consolidate, basically moving sideways, likely meaning there's not enough bullish pressure to push right through again to make a new high. And what could happen? That's right, it could continue dropping down. And with all this being said, now I'm gonna give you a real-time trade example I actually took utilizing everything I said. So we have a push exhaustion scenario, which is the higher high and higher low. You can also see that the 3 moving averages are below the candlesticks, which shows bullish pressure. Now, the next thing in line is focusing on market structure. We want to find clear areas of support and resistance. And as we can see, this is a great area of resistance. Why is it a good area? Because every single time the candlesticks touch this price level, the market has reversed and pushed towards the downside. We can do exactly the same thing with the support. Just make sure it has been retested multiple times and it's recent. These rejections confirm that traders around the world are finding these levels attractive to trade. Okay, and now we have all our levels marked. We can actually add our moving averages back just to make the setup fully complete. So looking at it, we currently don't really have a trade going, right? We had that push, we had that exhaustion, higher high, higher low, right? We have a previous area of resistance, not a lot of space for movement. What do? We need to head over to the daily time frame to see what's up. Remember, the main reason we're looking at the higher time frames is because price action is respected a lot more by institutions on the higher time frames rather than the lower time frame. So on the daily time frame, you're looking for potential chart patterns, breaks of structure, and potential profit zones. In this case, we can see that there was a trade breakout just over here. This was the previous area of resistance, and this new candlestick closed higher, which is typically a great trade opportunity to buy. And we can actually see the higher highs and higher lows on the daily time frame. Each time frame will have similar price action. That's why it's really important to have a look at the overall image rather than a singular time frame. And with this information, we are done with step 1. Okay, step 2 is how to prepare and predict price action trading. We'll come back to our previous plot a little later. Here's a trading challenge for you. Simply ask yourself, what can the price do off this level? Well, there are only 2 possible options, maybe 3, which is going up, going down, or maybe goes sideways for a little bit and then goes up or down. So if the price goes down and hits our previous area support, we should never be scared to predict that the same thing will happen again as it touches the respected price level. Furthermore, if the price action does decide to continue dropping down, you either don't enter the trade at all, especially if there's no trade confirmation. We'll talk about this a little later on, or you want to make sure you're not risking too much to stay in the trading game. You don't want to burn your balance from one trade. So you never want to trade somewhere in the middle just here, because it doesn't make sense. It's not a high probability trading setup. You want to trade where there is a strong level of support or resistance. In this case, we can see that the level was respected multiple times. There is a trend towards the upside. New higher highs are happening every single time the market touches the support back it pushes further up. Look at this, goes down. Likely what you should expect is another push towards the upside to make that new higher high and higher low scenario every single time. So if you simply enter the trade something like this, covered your previous area of support level, right, this could have been a beautiful trade. But the point I'm trying to make, every beginner trader is impatient, and when you're impatient, you're trading off levels that don't make sense, and if the levels don't make sense, it's not a high probability trade, and you lose out on high probability trading setups that actually make money in Forex trading. So make sure to not make these mistakes, and let's move on to step 3, which is take action with price action and entering the trade. Okay, so there's many ways to actually confirm when to enter the trade. You can utilize candlestick patterns. I actually made a full course. You can click over here to watch it. There's also trading chart patterns, double tops, head and shoulders, wedges. Combining price action with a few indicators such as the RSI and moving averages are my favorite. Understanding daily market volatility, how much the actual pair moves per day. If it usually moves 40 pips and the outlier day is 80 pips, you can expect a pullback trade. Last is focusing on all of the above mentioned with different time frame analysis. Now look at everything, however, not every day everything is going to be there. So you simply trade what you can see. So let's go back to our initial trade setup and let's just move a couple of candlesticks further. We can see a cross on the 4-hour time frame. That is another push exhaustion, right? A new higher high, higher low. Push, exhaustion, push, exhaustion. What should we expect? Another push towards the upside. Now, to utilize the full price action, you want to enter the trade on the lower time frame. So since I'm using the 4-hour, I want to be looking at the 1-hour. On the 1-hour, we can see the same push, exhaustion, push scenario. But what's important, this candlestick over here, it's a bullish engulfing candlestick, a great candlestick pattern that combines with price action. Furthermore, I believe the stochastic RSI is also oversold. So look at the confluence. We have stochastic oversold, we have bullish engulfing candlestick, and we also have the moving averages, which is a flexible support per se. So with all that being said, we can close off the stochastic RSI just to declutter the chart. On the 1-hour time frame is our entry, so we can consider entering the trade. The stop loss level has to cover the previous area of support and preferably the 200 moving average over here. The take profit level can be the previous area high, but if you want to aim a little higher, you can look at the higher time frames such as the daily or the 4-hour time frame. So if we look at the daily chart, you want to be aiming for the previous area top, somewhere over here, 2-to-1 risk to reward, simply meaning that you're risking $100 to gain $200 back. Always make sure to aim for the level where there was previous area of sensitivity. We can see a ton of it over here, but there's also a potential that you could reach this area zone, hence why I put it halfway there. And after we search for every single trading opportunity, you're ready to actually take the trade. And let's see what happens. After the bullish engulfing candlestick closed, it pushed towards the upside. We retested the previous area high over here. As we can see, previous resistance was broken just around here with another bullish engulfing candlestick. What happened? A new higher high, which is another push. Then exhaustion back to the previous area of sensitivity, which is the higher low. And then we saw another retest over here, breakout, and another push towards the upside. In this situation, I guess there would be another exhaustion back to the previous area of sensitivity. This is the best way to trade Forex, crypto, or stocks. And if you actually want to learn how to trade Forex, you can join my group, link down in the description below. And I suggest you carry on learning by watching this video next.